So in this video, I want to go over the latest shareholder letter from the Oracle of Omaha, Warren Buffett himself. This is a letter that I look forward to every year, so I'm excited to dig in. The first page I look at is actually the last page, which is the Berkshire performance versus the S&P 500. So let's take a look at that. We have the record since 1965 and all the way up to year end of 2024. So as we can see here, the compounded annual gain from 1965 to 2024 is almost 20% against 10.4% for the S&P with dividends reinvested. And we've had a raging bull market going on in the US for the past couple of years, and still Berkshire has been performing pretty well against the S&P. We can see that they only did 2.4 versus 18 in 2020, but they still outperformed the market in 2021, outperformed it by a lot in 2022, slight underperformance or more than slight, 11% in 2023, and were up by 0.5% in 2024, which is pretty impressive. So if we go to the first page of the letter, Warren is talking about mistakes, which he frequently admits doing. And we can see here that during the 2019 to 23 period, he has used the word mistake or error 16 times in his letters, and most other companies, and you can see this if you read through the 10Ks and the earnings transcript, and they've never used either word, mistake or error. That's very common. But Amazon is a company that candidly admits their mistake, at least when Jeff Bezos was running the company. So if we take a look at the earnings more closely, we can see that insurance underwriting was very meaningful at 9 billion compared to 5.5 in 2023. And the income from the insurance investments was over 13 billion compared to 9 last year. BNSF is staying rather flat. I think it's a company that's very mature, so unlikely to see a lot of increase in the earnings there. Berkshire Hathaway Energy is showing a slight increase in the earnings. And then you have the other controlled businesses and non-controlled pretty much doing the same thing as in 2023. And in total, you have operating earnings of 47 billion versus 37 last year, which is a very impressive gain for Berkshire. And we can see here in the note that non-controlled businesses are businesses where Berkshire has between 20% and 50% ownership, such as Kraft Heinz, Occidental Petroleum, and Berkadia. So with $47 billion of earnings, the company has a market cap of just over $1 trillion, which means if you were to buy Berkshire Hathaway today, you'd be paying about 22 times earnings, which is an earnings yield of about 5%. I think you could do much worse than buying into Berkshire Hathaway, although I do think it's not the best opportunity in the markets right now. And I do think that Berkshire Hathaway trades at a pretty fair price compared to their intrinsic value. And this was interesting from Warren, where he talks about how much Berkshire pays in taxes. But they paid $26 billion in taxes last year. And if Berkshire had sent the Treasury a $1 million check every 20 minutes, throughout all of 2024, with 366 days and nights, because it was a leap year, they still would have owed the federal government a significant sum at year end. So you can see the huge amounts that Berkshire is paying to the IRS. And I've seen a lot of talk about the extraordinary cash position that Berkshire is holding, and that it means some kind of forecast from Warren on the markets being too high. But Warren doesn't really agree with that. He talks about here that while their ownership in stocks moved down from 354 billion to 272 billion at the end of 2024, the value of their non-quoted controlled equities increased somewhat and remains far greater than the value of the marketable portfolio. So if we add together the stock portfolio of 272 billion With the controlled companies at over 300 billion, you can see that Berkshire holds a stake in other companies worth probably more than $600 billion, plus the pile of cash they're sitting on. Those are some pretty remarkable numbers, and Berkshire really does have a fortress of a balance sheet. So Warren talks about his investments in the Japanese companies, and it has been almost 6 years since Berkshire began purchasing shares in the five companies that are very similar to Berkshire. And all of these five companies operate as holding companies where they own stakes in several other smaller businesses. And we can see here that Berkshire bought stakes in these five Japanese companies for $13 billion, and the market value of their holdings is now 23 billion. So a pretty decent return on the money in 6 years. So if you know anything about these investments, you know that Berkshire took out a loan in Japanese yen to fund the purchase of shares in these Japanese companies. And he mentions here that we like the current math of our yen balance strategy. As I write this, the annual dividend income expected from the Japanese investment in 2025 will be about $812 million, while they're only paying interest costs of their yen-dominated debt at 135 million. So yet another brilliant strategy from the Buff Dog. And this is a good summary from the Kobisi letter on X or Twitter. Although I don't agree with them that this is some kind of market overvaluation warning from Warren. It's still a good summary. So Berkshire holds now $334 billion in cash, and between Q1 and Q4 of 2024, their cash balance rose a massive 145 billion. That's crazy. And you can see the cash and cash equivalents just growing as the years go by. You can see the massive spike here. And they have 44 in cash compared to 34 last year. And they have $286 billion in T-bills compared to last year, 129. And this is a pretty interesting point. To put this in perspective, the US Federal Reserve currently holds 195 billions in US Treasury bills, which means that Berkshire Hathaway now holds 91 billion more of T-bills than the Fed, which is 47% higher than the Fed itself, which is pretty crazy to think about. And the cash balance is larger than the market cap of all but 30 public companies in the world. And Buffett's cash pile is now larger than the market cap of Coca-Cola and T-Mobile. And apparently, Warren doesn't seem to think that Berkshire is undervalued, seeing that he did no buybacks in Q4 of 2024. And this is the second straight quarter without buybacks. And of course, like he said many times before, he will start buying back the shares when the price is below intrinsic value. It is always interesting to see what he's doing with his Apple position, but Buffett started to build his Apple position again after cutting it by 104 billion since Q4 of 2023. It jumped by 5 billion to 75 billion in Q4 of 2024. And Buffett has said that Apple will remain their largest investment, so it's likely that he has stopped selling the stock and is happy with the current allocation. But we can see here that in Q2 of 2023, the market value of the Apple stake went up to 178 billion, but has now been trimmed down to 75 billion. But at one point was, of course, well over 50% of the stock portfolio. All right, that's it for my summary of the Berkshire Hathaway shareholders letter. Let me know your thoughts in the comments, and remember to like the video and subscribe to the channel for more videos like this.